all are aware that this is an interim budget, hence not much announcements and status quo has been maintained, and probably that will come, when the full budget comes in June or July. But we still thought that we would look at doing this budget from a perspective that how government has maybe fared over 5 years in terms of bringing reforms, and how they are doing both on the tax and economy side. And that's why we thought that it will be good to have a couple of senior economists along with us to discuss that part, and also see that how next probably 5 years with the new government will come. As we all know that the confidence of government is quite high, and hence probably there was no populist measures actually announced yesterday, and quite an FDI focused sort of a program, or the speech. With that in mind, we will have today's session in two parts. A little bit on tech side, which our partner Grant Thornton, team will be taking up, and then we will have a session on discussing macroeconomy indicators. And I have shared the agenda with everyone, so you have the names of the speakers, and we'll come to that in a while. But before we begin, let me invite our chair for FICCI Maharashtra State Council, Ms. Sulajja Firodia Motwani, who's the CEO of the Kinetic, Green, to give a welcome remarks. As you all would be aware that, Kinetic is an iconic brand, and is pioneering a lot of, initiatives in electric vehicle space. And under her leadership, and a vision to bring green mobility to the masses, Kinetic Green has risen to be the leading manufacturer of electric three-wheelers in the country. And the company obviously aims to be global leader in light electric mobility, specializing in electric three-wheelers, two-wheelers, and golf carts. And obviously, she's been recently busy to bring a very, very iconic brand, Luna, to come back in a electric avatar. So thank you, Sulajja ji, for joining us in that hectic, mode of launches, and hope Luna will see another, good response as it used to be in our days. Actually, we learned our automobile journey from Luna. So thank you for joining, and over to you. We look forward to hearing your remarks and on the budget.
Thank you so much, Deepak, for those introductory remarks, and especially the best wishes on the e-Luna. Obviously, we are very excited about the relaunch of Luna in its electric avatar, and the launch is happening next week. But I must tell you, all of you, I'm just excited, so I'm sharing this with you, that there's a lot of anticipation, enthusiasm about the e-Luna coming in. And on my own LinkedIn, there are hundreds of best wishes and stories that the Luna family has put in. And one popular slogan has already emerged, which says, "Chal Meri Luna, a petrol ke bina." So anyway, I think it's an exciting product, and to me, it is a product that will bring green mobility genuinely to the masses in the country. So request your best wishes too. And on that note, let me extend a very warm welcome to all of you to today's session. I'm joined by our co-chairs for FICCI Maharashtra, Ujjwala Singhania ji and Dinesh Joshi ji. So on behalf of all three of us and Deepak, I extend a very warm welcome to the speakers of today and the delegates who've joined us. We have an absolutely stellar lineup of speakers who I'm sure will throw some very interesting insights on the interim budget, and help us to kind of decode and think about the short and long-term perspectives and impact of the financial announcements made by the finance minister. So we are also thankful to Grant Thornton, who have partnered with us for this session, and we are very happy to welcome Mr. Karan Kakkar, who's their partner on indirect tax. We're also pleased to welcome Mr. Amrit Kaal from Hyderabad for announcements on the direct tax. So in the first session, we'll cover the tax-related aspects of the budget. And then in the second session, we have a stellar lineup of speakers looking at really the macro indicators and the macro impact very proud to tell you who our speakers for the second session are as well. We have Mr. Tamal Bandopadhyay, Consulting Editor of Business Standard, who will moderate the session. And as panelists, we have Mr. Sunil Sanghai, who is the chair of FICCI's Capital Markets Committee, as well as the CEO of Nova One Capital. We're also joined by Dr. Sachchidanand Shukla, who is the Chief Economist Forum and Chief Economist of Larsen and Toubro, and he's a co-chair of FICCI's Economist Forum as well. We have Mr. Madan Fadnavis, who's the Chief Economist at Bank of Baroda. We have Mr. Rajneesh Sinha, who's the Chief Economist of CareEdge Group. And we have Anubhuti Sahai, Head of Southeast Asia Economic Research of Standard Chartered Bank. So absolutely, absolutely a distinguished set of speakers on both the sessions, and I thank all of them for making time to be here with us today. As we all, of course, aware, yesterday the Finance Minister has given a short but sweet and a very impactful speech on the interim budget. And at FICCI, we believe that this budget, an interim budget, is quite clear, it's focused, and it's outcome-based, and it's in continuum with the Viksit Bharat vision, and sort of consistent with the approach that we have seen over the last few years. It kind of brings together the growth, climate, and social empowerment all together, while maintaining a very strong balance between the current investment rate and the fiscal discipline as well. So it's a very balanced yet directionally very positive budget. Some of the things that definitely appeal to me is, of course, the focus on EV ecosystem and overall green initiatives, whether it is through the support to this rooftop solar or recognizing that charging infrastructure is something that as a nation we will focus to promote EV adoption. And overall, green was very much part of her vision that she spoke about, again, in line with the energy transition goals of the government. I also very much like the focus on enabling the states to seize the momentum and create that like a strong move forward on the reforms. Focus on domestic tourism, I think, coming from the finance minister directly, I think is a very directionally important step, because I think India certainly has a great untapped potential on tourism. And I think our state of Maharashtra has, of course, great potential in this with our rich history and heritage of the forts and the Ajanta caves and the beaches and so much that we have to offer. I hope that we will really take this in a very positive way. The focus on women-led entrepreneurship ventures also really resonated with me. So I think all in all, I found that there's a lot of existing initiatives. They all kind of are towards development and reforms. And of course, today our experts will give us much more deeper insight, while directionally we all, found that the budget was very positive. And I think overall, if you heard yesterday's speeches, most speakers, most experts have applauded the budget, but always the devil is in the details. And also kind of a deeper dive into the impact of the budget on the economy and, of course, on all of us as members of the industry or ecosystem. So towards that, let me now, without much further ado, invite our experts to share their vision, their thoughts, and I also request all the participants to certainly take the opportunity to ask questions and get their queries clarified. So with that, thank you, Deepak, for arranging the session. And thank you all the speakers for being here with us and all the participants. And I wish all of us a wonderful session and a wonderful year ahead. Over to you, Deepak. Thank you very much.
Thank you, Sulajja ji, for sharing FICCI's view on the on the interim budget, and as well as your views in terms of the initiative being taken in front of green and sustainable solutions with EV being included in it. So thank you very much. Now let me go to our tax experts. We will, although as we have and we all are aware that there's a status quo and nothing much has been changed, but we still thought that if there are any fine prints where something people need to know, we would look at both direct tax and indirect tax side and understand if there is any finer changes at all in the budget. So to do that, first on the direct tax side, I would like to invite Mr. Amit Kumar from GT. I mean, Amit has over 23 years of post qualification, experience in audit and consulting in varied field of international corporate tax, merger and acquisition, and regulatory matter. And he specializes in advising clients on business and operational structure from a tax and regulatory perspective. He also advises on international tax implication on cross-border transaction. So, Amit, over to you on the tech side, on the direct tech side, whatever you have for us to, discuss and share.
Sure, Deepak. First of all, let me thank you, the FICCI Maharashtra, for inviting us on this. And as you also mentioned, and Sulajja also mentioned, that this was an interim budget. And being an interim budget, while the industry and we all were expecting some changes, but there were no major tax proposals or announcement. The good part, or rather, I would say the satisfactory part is she tried to lay down what the intent of the government over the last 10 years and how it's going to unfold in the next perhaps budgets. She did mention about what changes have been brought into the tax system over the last 10 years. She articulated that the direct tax collection has been tripled, that's 3 times in the last 10 years. And the number of taxpayers also have increased by 2.4 times, which is encouraging given the effort, given the economy, the way we are going. She also articulated and mentioned some of the key steps which government has taken over the last 10 years when it comes to tax governance or the tax services, be it reduction of tax liability in the hands of individual by increasing the basic limits from 2.2 lakhs to 7 lakhs, or reduction of the tax rates of corporates from a 30% to a 22% or 15% in case of manufacturing. She also mentioned about and gave a huge weightage on the introduction of the faceless assessments appeal processes, which is basically aimed to increase efficiency, transparency, and accountability. She mentioned about few of the new tax forms, policies, which are again meant to reduction in time for reducing the return processing time. And she mentioned about 93 days in the last fiscal year on an average time which has taken for processing the return. Now, what all this signifies? This all signifies to me that the government continue to focus on governance and transparency by using more technical support, technology support, and data mining. Today, government is getting data from all over where, and we have seen the kind of administration of the data happening, the kind of reconciliation data happening at the back end, and it clearly signifies that they are going to continue in that path. Further, one more thing has come up by she mentioning some of the steps taken on the new regime. The, the thought process was very clear that the government want to continue on the new regime of tax, where they are lowering the tax rates or lowering or increasing the basic exemption as the case may be, but claiming of any other deductions, exemptions are being discouraged. This can be seen both from a positive and negative perspective. Positive that the administration could be easier, negative that tax swaps, etc., which is expected, perhaps may get denied or may get discouraged over a period of time. Now let's come back to what are the proposal which has been suggested. And as I mentioned in the start of the conversation that there was not much major tax proposal or tax announcement. Therefore, there was no change in the rates. The rates continues to be the same which was there in the previous year. Yes, there was certain extension of the sunset clauses relating to certain tax exemptions, and they were important because some of these were getting closed on 31st March 24, and therefore they have made an extension of 31st March 25 by just 1 year extension. Some of these key area which is going to get benefited by these extensions are basically profit linked deduction on account of aircraft and ships in IFSC, incorporation of eligible startups which can claim the startup benefits of tax holidays, etc. Investment made by sovereign funds, pension fund, and ADIAs. There also the extension has been made by 1 year. IFSC driven IBUs, their income was also been extended by 1 year. And the royalty or interest income by leasing of aircraft and ships, again in IFSC. In the midst of all this thing, what we noticed that the extension for the manufacturing unit to claim a lower tax rate of 15% has not been made. I believe that it could be more of a miss, which perhaps may get ratified or may get corrected over the period of time. But one thing very important that industry expects some sort of a clarity by getting this extension for a little longer period of time, maybe 3 to 5 years, as compared to a 1 year extension. Because if you get some clarity on 3 to 5 years, business can plan their expansion, they can plan their investment accordingly. But nonetheless, they have been extended by 1 year, therefore something to cheer on that front. The next next proposal which has been made is, if you recollect, last year there was some TCS which has come on liberalized remittance scheme. Wherever an individual makes a payment outside India, there were certain TCS were levied in Finance Act 23, which was further get extended or rather revised during a circular which was raised in October 23. This budget has tried to bring all those rates which were there in circulars into the Finance Act. So, in short, there is no change in the rates. It's just about bringing them into the statute books. Uh, Two very good important things which government tried to do it. Number one is faceless assessment and appeals, which obviously has been introduced to aim accountability and transparency. They are only available today on limited forums like assessments or appeals or to some extent penalty assessments. But they are still to come on the other forum like dispute resolution panel or for that matter transfer pricing assessment and to some extent into the this ITAT as well. The government has put up a framework that by 31st March 24, they will come up with some thought process about how they are going to extend for other forums. And that extension has been made to 31st March 25. That means in the next year, 1 year, the intent is very clear that they are going to come up for the DRP and transfer pricing assessment, so on and so forth, also under the faceless appeals and assessment schemes. Last but not the least, she has also made an announcement for withdrawal of the tax demands, and these are disputed tax demand, which was there for quite some time. She did mention about it is coming from 1960s as well. That up to 25,000 for all the demands up to fiscal year financial year 9-10, and then up to 10,000 for the financial year 10-11 to kind of financial year 14-15. She did mention that it is going to impact more than 1 crore taxpayers because they may be appearing as a small demand. Most of them perhaps may be non-reconciled. So this is surely a good step so that some of the clarity can come up. And I'm sure that it may not have that much impact on the government side also because the kind of quantums are very less. To cut a long story short, budget was more of a status quo. And from a tax perspective, from a direct tax perspective, more of a giving direction towards governance and transparency. And government is more going to rely on some of the steps which they have taken in the past in terms of new regimes of the tax rates or the tax exemptions, and they are going to continue with that. Some clarities were expected, some wish lists were there during the course of the last 2 months, 1 month, and we have seen quite a few articles. Some of them, or none of them rather, has come up into the sea, but I'm sure that in the next budget, which happens perhaps in June and July, the new government will going to take care of some of them, and industry should expect some of the clarity on all these aspects. With this, I'll hand it over to Mr. Karan Kakkar, who will take us through the indirect tax process. Deepak, you want to come here?
Yeah. Thank you. Thank you, Amit, for sharing those details. And obviously, we are aware that probably most of these wish lists, which probably everyone would be having, can only be addressed in the full budget once the new government is in place. But we'll hope that those will get answered at least in those budget. the upcoming budget. Let me now invite Karan, who will cover the indirect tax part. Karan is a qualified chartered accountant with over 17 years of experience in advising clients on indirect taxes, and he has advised in the areas of GST, VAT, service tax, central excise, customs, and FTP. And he specializes actually in GST advisory related to complex business transaction, tax projections and simulations, and central and state government incentives such as PLI, MEP, etc. Karan also has a wide experience in tax dispute resolution, in tax litigation, and assisted a number of foreign companies in India entry strategy. Karan, over to you to give us some insight on the indirect tax side.
Sure. Thanks, Deepak. And before I begin, and I forget, I want to congratulate Sulajja ji for Luna project. Hope that flies and gives you a lot of success. So on the indirect tax side, again, like my colleague Amit mentioned, there is nothing much which has been announced as a proposal because it was expected that it's an interim budget. So not many changes. And, in indirect tax, if you really see, what we are seeing after GST has been introduced from 2017, there are not many changes which come in under GST unless and until there is some legislation changes which the government thinks to tinker with. Because it is more or less decided by the GST Council throughout the year, and we see so many circulars and notifications coming in. But yes, nevertheless, what really caught my eye on this budget, apart from indirect tax, which I'll be discussing, was on new terms which were really coined by our finance minister. In the interim budget, they introduced the new terminologies, to encapsulate the government's vision and priorities. So, for example, what she mentioned was FDI is now referred to first development India. So this is, the focus and the theme what the government is going, and this is clearly in line with the Prime Minister's vision of Make in India as well. That okay, let's first try to develop India and then invite any foreign investments into India. And the other, what really caught my attention was GDP. It it was redefined as governance, development, and performance, stressing effective governance role in driving economic progress. So that was, something which really stood out. And the last one, what caught was GYAN, which stands for Garib, Youth, Annadata, and Nari. So, which really reflects the government's commitment, to addressing the needs of these segments of the society. So having said that, on the tax side, indirect tax side, there was only one change or one proposal which, I would like to stress upon, was on the input services distributor. So in the 50th GST Council also, in recent past, the government had intended that they will make the ISD, which is Input Service Distributor Registration, mandatory for the businesses where they are receiving any common services from the third-party vendors. So, for example, there is a head office and they have multiple branches across India, and head office receives common services on behalf of the entire company. So earlier, input service distributor mechanism was present in the law, but it was not really mandatory. Now, wide this budget proposal in the finance bill, they have introduced and make this provision mandatory, which also not only said that okay, registration will be mandatory as and when this proposal comes into effect. Even the reverse charge supplies for the common services where the reverse charge is paid by the company would be done through input services distributor mechanism, and all those time periods, mechanisms, etc., all the rules will be defined in due course, which we need to keep an eye on. So that was one of the major changes. There was another introduction of a specific penalty provision, for specified goods such as tobacco and other pan masala and other tobacco products, wherein they had, mentioned to register the machines. And that was primarily because there was a lot of leakages which were happening in this sector. So to curb that sector, the stringent penalty provisions have been defined or proposed under this finance bill. So that was, more on that. And the finance minister also touched upon how important GST has been in the entire economic growth journey of India. And, she also reinforced the vision, one nation, one market and one tax. And, clearly, which is coming out, and the results are being seen by monthly gross GST collection nearing doubling to 1.66 lakh crores, last month. So to the last year, if we compare it, so this is really, really been, and they really, are looking for much more in the coming times. So that was more or less, on the budget side from the indirect tax proposals. So Deepak ji, back to you. I think I'll keep it very, very short because there was nothing much in it.
Thank you. Yes, Karan, we understand that, because of this being, an interim budget, we could not really get much out of it on the text front. But a lot of, cue in terms of how this government is looking at the macroeconomy, the fiscal side of it, and so we will discuss probably that part in detail. And I really have, pleasure of introducing our esteemed guest panelists out here to discuss the way forward on the on the economy side. And the session, this will be moderated by Mr. Tamal Bandyopadhyay. He's the consulting editor of Business Standard. Along with him, we have Dr. Sachchidanand Shukla, who's the chief economist of Larsen and Toubro Group, and also co-chair of FICCI Economist Forum. We also have Rajni Sinha, chief economist of CareH Group, Anubhuti Sahai, head South Asia Economic Research, Standard Chartered Bank, and along with them, we have Mr. Madan Sabnavis, chief economist, Bank of Baroda. Mr. Sunil Sanghai will also join us, who's the FICCI capital market chair and a founder of Nova One Capital during the course of our discussion. So I would now invite Tamal for this interesting discussion and conversation. Tamal actually does not need really introduction. He's a very, very, one of the most respected business journalists in India, author of several books, and has many of his weekly columns are, pretty much, read by anyone who has a deep interest in banking and finance and in general economy. So over to you, Mr. Bandyopadhyay, for this discussion.
Thanks, Deepak. Very kind words for me. But important people are the economists and others who are joining you, not me. So as a moderator, my job is to talk the minimum. I would just like your audience to hear them, what is their take on it. So let me first introduce the subject in a very limited way, because as I said again, and I understand that Madam Motwani would be leaving shortly after half an hour. So I'd ask her, there's no gender bias to kick off the discussion to have. But before that, let me introduce, just take a quick look at how the various newspapers have described the budget. Times of India says, sure of vote, FM keeps account simple. It's a sort of word play on the vote on account or interim budget. Sure of vote, FM keeps account simple. Look at others. Indian Express is saying interim budget, no pole vault, measured step looking ahead. Mint says vote on confidence. Hindustan Times says eye on 2024, vision for 2047. And yeah, that's business saying confidence, not on populism. So these are all very, very positive. One-liner talks about that this budget doesn't care much about the elections around the corner. It's not seeking votes. It's not populist, and it's and most importantly, it's firmly on the consolidation path. But Economic Times says picture abhi baki hai. That gives a sort of it's really intriguing that what we are seeing that probably is not the full thing. We need to wait and watch. The reason primarily being this is an interim budget, this is a vote on account, and the real budget would be sometime in June, July post the elections. So this is the context, and if we leave that out with mystery bit or the curiosity bit, whether the finance minister would stick to the line what she had committed yesterday, we need to watch out for in the coming days. But for now, I think the script is perfect. The forecasts that the finance minister spoke about, poor, women, youth, and farmers, and the budget talks about them. But if you see the math, the number, the arithmetic, there is nothing much there in the sense to be a populist and to be with them and jeopardizing our fiscal consolidation. She is very firmly what she had committed in February 2022, that we will achieve fiscal deficit at a 4.5% by 2026. She is on to that, and which is why at this point of time what we need to wait and watch. But as of now, she has actually the estimated or the revised fiscal deficit for the current year is 10 basis point lower, and the next year again it's 5.1. So it's essentially better than what the market expected. And so this is the macro scenario, that she has stuck to the fiscal consolidation path. She is not into populism, and this budget doesn't care much about the elections around the corner. It talks about only economy and how to make sure that the inclusive growth will go forward. So this is the macro thing, but let's hear the micro issues from our panelists. And as I said, Ms. Motwani would be leaving shortly, so which is why we'll start with her. I can't see her. Is she there? Has she joined?
Tamalji, sorry to intervene. I think she's just dropped out. I'll just check and figure out if she's joining back. But meanwhile, others are here.
Yeah, sure. So let's then Rajni, we'll start with you, being an economist. I mean, there is you tell us, it talks about fiscal consolidation on the path she is there. It talks about 11% increase in capex, and it talks about also the inclusive growth. So could you take us through, as an economist, how do you look at it? And before that, Rajni, just one simple question is this: do you think that she is into a little bit of numerology? Because you see the capex is 11% up provided, and then what would be a new number? 111111 crore, which is 11,11,101 crore. So it's something to do with numerology.
So Tamal, I won't be able to comment on that, but yes, looks like. Like you highlighted, I would say the main thing that I would like to highlight in this budget is what you were talking about, that the FM has very clearly focused on fiscal consolidation. And I would say this was an apt time to do that, because the economy is recording robust growth. We go by the advance estimate, we are looking at 7.3% growth. So I think it was just appropriate at this time to focus on fiscal consolidation. And in fact, the interesting point is that even while they have focused on reducing the fiscal deficit, they have FMS continued to focus on capex. So if you look at capex, like you mentioned, it has grown by, it is budgeted to grow by 11% to 11 lakh crore. And
11 lakh, 11,000,
yeah,
1111 crore.
Yeah.
Something like that. Yeah, 101 crore. Yeah.
Yeah. So, and if you look at capex as a percentage of GDP, that has continued to go up. So it's at around 3.4%, which is a little higher than 3.3% or so that we have for last year, and much higher than less than 2% that we had pre-pandemic period. So this is a positive trend that we are seeing. And again, the focus has continued on roads and railways. So very clearly, while as a percentage of capex, the share allocated to roads and railways have gone down marginally. It has gone down to 47% from around 52% or so for last year. but clearly the focus is on transport infrastructure, which will definitely benefit, and it's in line with this whole objective of bringing down the logistics cost, which will in turn benefit. Sorry.
Yeah, please
So
carry on.
which will in turn benefit our manufacturing sector. So yes, the positive aspect is that they have continued to focus on capex. If we look at the reduction in fiscal deficit that has been budgeted, that also looks quite achievable. Because if you look at the tax receipt numbers that have been budgeted, the tax buoyancy is at around 1.1 or so, which is quite achievable given that last year the tax buoyancy was for FY24 is much higher at around 1.3 to 1.4. So in that sense, the fiscal deficit also looks quite achievable. The disinvestment, the number that has been given, well, given the past track record that we have seen the last few years, that number looks a little shaky. We're not sure that 50,000 crore will be achievable. But again, if you look at the other components like non-tax revenue, again, they have assumed that good revenue that they have got from dividend transfer from RBI and public sector banks and other PSUs will continue this year. So in that sense, I would say overall fiscal deficit target looks achievable. It's a good trajectory continuing in fiscal consolidation, focusing on capex, and at the same time, I would say the much required, making the right, ticking the right boxes for the social sector in terms of, schemes for women, for youth, focus on the rural economy, that has also continued. But having said that, I would just like to highlight one aspect. For the rural economy, if we look at it in terms of schemes, the amount that has been allocated for some of the big schemes for the rural economy, like the Manrega or the Pradhan Mantri. In fact, for Pradhan Mantri Awas Yojana, the amount has increased, but for rest of many of the other rural schemes, the allocation as percentage of GDP has gone down in FY25. So even while, they're talking about focus on rural economy, but this fiscal deficit consolidation that has been achieved by reduction in revenue expenditure as percentage of GDP. And that has been mainly through lower subsidy and lower allocation to some of these schemes. So I would say net, I would say it's a good budget because it has continued on fiscal consolidation. It has focused on capex. But yes, some more maybe in the final budget we would expect in terms of boosting consumption and in terms of giving a real boost to the rural economy.
Thanks, Rajani. In fact, that's what I pointed out, even though she started talking about this forecasts will do. But if you see the numbers, that part two in the allocation part is not, it's a very marginal number.
Yeah.
And just one small bit, you spoke about certain areas of investment and all. So one thing, I actually watched it on some of the channels and all. I mean, at least one or two places I found that people are talking about the defense spending. There is defense spending remain as it is. Now, the kind of way the geopolitics is evolving, do you think it's a wise move to keep the defense spending? I mean, there is no change at all. That's the kind of, is this the right approach, or do you spend more, need to spend more?
So at this point, you're right. Defense spending as a percentage of total capex has actually gone down. And like I mentioned,
Yes.
so has it for roads and railways. So the focus has definitely moved to some of the other segments. At this point, I mean, it's difficult to say whether it's a right move or not. Probably you're right. Maybe the focus on defense should have continued. But having said that, it's not a very significant fall that we are talking about here.
Okay, now even it's not even inflation adjusted, if you keep that. Yes. Yeah. Let's, Madan Saab is waiting for us. I mean, rather, people are waiting for Madan to hear you. So he's the chief economist of Bank of Baroda. Madan, tell us essentially how do you enter thing you look at. She spoke about, I think she hinted about nominal growth of 10%. Or 12%, sorry, nominal growth of 12%, which is not very, which is in contrast to what Reserve Bank of India governor spoke about, has been talking about 7% growth next year, which is the real growth. So there is a bit of, I think she seems to be more conservative, and which people are saying is a good thing. But overall approach to your take on the budget.
So, Tamal, the way I look at the budget is that it's actually a statement of account. Okay, it's a balance sheet and P&L of the government of India, in which there are certain policies which are thrown in to provide incentives somewhere. And normally there would be certain tax incentives, or you increase taxes to garner additional revenue. But I think we in the public, we expect everything from the budget. We expect the budget to be a panacea for all our problems. So there are always these questions among economists: does it spur growth, consumption, savings? Does it bring down inflation, increase inflation, balance of payments, so on and so forth? So I think there's a lot of hype which is generally built about the concept of a budget in India. So the way I look at it is that the basic elements here is that A, you look at what kind of GDP growth you're looking in the economy, because all items in the budget are linked to the GDP growth. So they're assuming 10.5%. Okay, last year we grew at 8.9%. They had targeted 10.5. Now you're saying it's again going to be 10.5, which I think is a very reasonable kind of an assumption to make. Second, you decide on what is going to be the overall size of the budget. So it's actually an Excel sheet. Now, you decide what the GDP growth is, then you say what is going to be the size of the budget. So therefore, we get this 47.5 lakh crores or whatever the number is. Now, once you have this particular number, you will have to see where the money is coming from and how we're going to spend it. Now, where it's coming from, I think we go on the basis of what are the elasticities of tax revenue when it comes to GDP growth. So I think all the numbers which we get there appear to be more on the conservative side. They can be higher, because last year also we were conservative and we got very good returns from GST and the direct taxation. So therefore, they're assuming corporate profitability will continue to be buoyant. We're assuming also that GST collections will be buoyant. So these are, I think, they're fairly reasonable kind of assumptions. So I think it's just an Excel sheet extrapolations which have been done there. Then when you look at expenditure, you say last year the budget was of the size of around 44, close to 45 lakh crores. Then it increased to 47.5 lakh crores. Now, how do I spend this additional 2.76, I think is a lakh crores is the exact number. So you say, okay, a certain amount goes for capex, which I think is what all we economists keep harping about. Because I think we fail to point out that actually the private sector is not doing its job. Okay, we keep harping on this 10 lakh crores or 11.1 lakh crores as spurring the economy. But practically speaking, when you're talking of capital formation of 90 lakh crores or 100 lakh crores, 10 lakh crores cannot move the needle much. The difference is that the private sector won't invest unless there's a return on capital, because you're answerable to shareholders. Government does not have to bother about it. They only have answerable to economists because of the fiscal deficit number. So if the fiscal deficit number is something which is palatable, then the rest of it will be applauded anyway, or it will be criticized whichever way it is. So here I think we all applaud it, because in this limiting of 2.76, 40% of it has been given for capital expenditure. And then you say, okay, the rest of it has to be distributed across the other items. So actually, if you see, interestingly, all the expenditures have actually been capped more or less towards the budgeted number of last year or the revised number of last year, whichever is higher. So it's been nothing else but an extrapolation of numbers. And I think the FM told us in the beginning itself, don't expect dramatics or anything dramatically different. So forget about all the articulation in the speech. That is a prerogative of the finance minister. But if you look at the actual numbers, I think it has been a very, very prudent way of extrapolating numbers. The only part which I found to be slightly different was the net borrowing program, which is same as last time. The gross borrowing program is actually higher, but you made it lower by taking out money from the GST compensation fund. So that's why it looks like the market is, of course, crazy. I mean, I don't see why the yield should have fallen a 10-year from 7.14 to 7.06. Today, I think it's 7.04. It's actually crazy. But everybody has interpreted less government borrowing, so therefore the yields are going to cool. Then you add the JP Morgan index inclusion, and it's been celebration time in the market. So that's my take on the budget.
Thanks, Vardhan. So I think you are pretty upfront and candid. So it's an overhyped event in India, and more so when it's an interim budget, right? Even otherwise, also it's not nothing but an accounting. So why do you get so excited?
In fact, Tamal, sometime back, I think the last year before last, I actually looked at what is the coverage of the budget in the media outside India and in India. I mean, in India, it's amazing. Even I have some articles which I'm writing in the next few days. So all of us keep continuing writing and commenting on the budget.
Absolutely.
In US, in 1 or 2 hours, the whole thing is over and nobody bothers.
Yeah, absolutely. And you said also that they are only answerable to economists like you and Anubhuti and Rajni and all, and you care about fiscal deficit. but what about others? All this fine. But just one before I let you go in the first round, Madan, since you are so frank about what's your take on this divestment program? Because this is always a sore thumb in almost every budget. I think historically, if we do an analysis and how many budgets, irrespective of who runs the show, we have been able to achieve it. And there's a new twist has been given, because after that we were told that no, its divestment is not important. Important is value creation, etc. But divestment always feature in the budget as a sort of revenue generation thing. So, I mean, why we are not? Is it? Why do we take a back foot? I mean, it's another matter that Air India took a decade or so for biting the bullet. But whenever there is a number given to it in budget, but we have not been able to achieve, why does it happen?
No, I would tend to think, Tamal, this is a very difficult issue ever since the low-hanging fruits have been plucked. So today, there's a clash of ideology. Because when I say the government has to go down below 51%, you're giving up entire thing. Now, see, people are looking at banks, people are looking at oil marketing companies. These are such critical sectors in the economy where you cannot take a decision across the table. So reducing by 5%, 10%, like LIC was also a big noise made about it, but it was just 5%. It was not actually changing the basic ethic of LIC, which remains Government of India controlled. So I think the way that I look at a disinvestment number, very often it's a balancing number which is given in the budget so that you're able to show something. Then you strive to get that number depending upon the market conditions, ideology, whether you have everything in place, you're optimistic that certain things will happen. And then very often it may not be happening. But I think as long as there are compensations coming from other parts of the budget, I don't think we need to be too critical of it. In fact, ideally, I would say, Tamal, that we should keep divestment out of the budget. I mean, you don't sell an asset to do it. You should keep it outside the budget and do whatever you want to, finance infrastructure, create a reservoir of resources, do anything you want to. Ideally, I think it should not be there. But now that it's there, I think we should be a bit sympathetic when you're looking at it, because it's not a very simple number which we're talking of.
Thanks.
I mean, there are lots of considerations which are there.
Thanks, Madan. So there are two parts to it. One is this, where the budget only, without giving any name, apportion certain money from disinvestment. That's one part of it. That we have not been able to achieve year after year after year. And second is giving names, but not attaching any value to it. Like, say, 2021 February, the finance minister spoke about taking IDBI, actually the true privatization, as well as without naming two public sector banks privatization, but keeping quite subsequent budgets and all, and nothing is moving. Anyway, that's a separate story. Let's not digress. Anubhuti, you head the Southeast Asia entire economic coverage of Standard Chartered Bank. Sitting here, tell us, how do you look at the budget?
Sure. Thanks a lot, Tamal, for that question. I think I'll just take a step back, and probably we need to look at the budget from a slightly longer term horizon rather than just been focused on one particular year. FM's reiteration that she would stick to the fiscal deficit target of 4.5% of GDP or lower, that brings on the table a lot of policy credibility. This was made in Feb 22, 2 years back, and a lot of things have changed globally. So policy credibility has its own set of merit, which we need to take into account. Why is it important, especially when we are looking at the fiscal deficit consolidation trajectory rather than just every single year fiscal deficit target? It's important for two counts, especially in the current environment. The government is extremely focused on or persuasive in getting a rating upgrade. Of course, the budget or commitment towards lower than 4.5% of GDP target doesn't bring it on the table right away, but it definitely gives it a push in the right direction. The argument gets much more stronger. Public debt to GDP is still high, it's still a long way, but it is a step in the right direction. Secondly, from June 2024, India gets included in one of the major global bond indices, and fiscal becomes extremely important metric when it comes to volatility around the FPI flows, whether it is in the debt, especially when it is in the debt market. And we heard a lot of comments, and even if you look at RBI, they are conscious of the risk as well as the opportunities which increased debt inflows bring to a country like India, which runs a twin deficit and has been persistently running a fiscal deficit. So I think this whole consolidation or recommitment towards consolidation is an important message which we need to take into account. Even from the ratings agency perspective, it's not just the headline number. I think the quality becomes important. Like Rajni spoke about capex increase, etc. I mean, that's extremely important. If you look at the increase or the fiscal deficit, what has been projected for FY24 vis-a-vis the pre-pandemic number of say 3.5%. I mean, this whole expansion is purely coming from capex, which is considered as a good, quality spend. Subsidies have been capped at 2% of GDP after the bump up which we saw during the COVID years, and obviously due to higher commodity prices during Russia-Ukraine war, or the bad monsoon which we saw in 23-24. So quality of fiscal consolidation by increasing more spend towards capex and containing revenue expenditure, I'm not sure if it comes at the cost of growth. If you look, for instance, farmer income scheme, they have cut down the targeted beneficiaries by 20%. It on its own increases the room to reach out to the right audience without actually increasing the actual allocation. So I think that also becomes extremely important to keep in mind when we are looking at the revenue expenditure growth or say the welfare schemes. You talked about defense spending. Yeah, allocation wise, probably it becomes a little tricky. But if you look at it as a percentage of GDP, it has been constant since, like FY14, 0.6% of GDP, it has been constant. So transparency, improved quality of fiscal deficit, much better targeting of the beneficiaries, and of course, the widening of tax base. We cannot miss out the kind of improvement which we have seen in the direct tax. And I think most of us would agree that further tax buoyancy cannot be ruled out because the GST data is yet to be completely mined and to widen the tax base. So I think it becomes important from those perspectives. It's an annual exercise, the way we look at like a monthly CPI. From a big picture perspective, it is definitely a good budget in my view. I mean, though we can keep on debating about a few numbers here and there, which really don't look in line. But otherwise, it's a good budget in our view.
Thanks, Anubhuti. But at the end of the day, again, it's sort of a pro forma kind of thing, right? It's a vote on account. I mean, it's just given the talking about the trend, and we need to wait and watch. But as far as the trend is concerned, I think we are going through a transparent path at this point of time, which was not the case a few years back. Budget numbers were always, people used to talk, look at them with a lot of cynicism because there are a lot of below the line spend which budgets were not catching. I remember early this century, Ashim Dasgupta was the West Bengal state finance minister, used to present two budgets. One is, if this thing happens, then this is the fiscal deficit and this is the spending. And if these things do not happen, this is the other way around. So every time there was two budgets from this left front government those days. In our case, in India's case, Indian budget was not the case, but those who were cynics and who used to look at the number, they also used to say there were two budgets. One is this non-transparent, which has been presented, and other is there will be a different thing if you look at the numbers and below the line numbers. But fortunately, I think that's not the case anymore. For the past few years, we are looking for more transparency, and of course, consolidation is the mantra. So, Sachchidanand kept you waiting. You also represent a very important element of the growing India, L&T. So tell us, being an economist of that, how do you look at this? Welcome, Sunil.
Sorry for delays.
We just started. We could not wait for you to join. We just started. So we'll come to the economists are hogging the limelight. You will come after this.
This is actually economics budget tech. So
Sachchidanand, come.
Yeah, thank you, Tamalda. I think very good context setting. Anubhuti, thanks for that. I think we also need to look at the big picture. Tamalda, as we speak, the era of no color of money, the phrase, right, is over. We are now looking at money which has become much costlier, incremental investments, and also friend shoring. So we've seen weaponization of flows. For example, friends of the US are getting more flows vis-a-vis others, right? So there is this interesting study put out by the World Bank, and there's also some chart and graph by the IMF. But I think the big picture, Tamalda, is simply this. Look at the contrast of two of the largest democracies in the world which are going in for elections. One of them, and you can guess the name, the deficit actually shot up by $622 billion in Q3. And in the last 3 weeks, the deficit has gone up by $200 billion, right? I'm talking about the US, you would have guessed it. They have overshot fiscal spending by more than $1 trillion for last year. And they also have $1 trillion plus of debt really maturing. And the interest expenditure is now $1 trillion, right? 1.05 trillion. And now compare and contrast what the Indian government or the Indian fiscal arm is trying to do, which is the other democracy going in for an election. And Rajni did speak about the revenue expenditure being lowered, etc. I think we need to see this consistency from this government. It's not a mystery. It's happening for the last few years. And I'll just give you one statistic. It may sound unremarkable. So please hear me out. In FY20, the capex to GDP was 1.67%, right? And that's more than double to say 3.4%. That sounds not very remarkable. What is remarkable is that this is the longest period of uninterrupted capex rise, right? We have not seen this in the history of Indian fisc. None of the governments, none of the regimes, not in the past. And this is how remarkable it is. And also, so the global backdrop is the fiscal arms really misbehaving and just splurging without really thinking of consequences. And here is a government which is going in for an election, and it has continued to deliver on fiscal consolidation, which has continued to deliver on quality spending. Now, why is this quality of spending also important? If you look at the kind of spending we are talking about, the government is going to be spending about 47 lakh crore, and that's not a joke, right? If you're spending such humongous amounts in a capital-starved economy or capital-deficient economy like ours, I think we better direct it to more qualitative areas in the economy. And as Anubhuti pointed out, we are doing the right thing for the last few years now in a row, right? And continuously. And also there was a reference made to the defense spending. Just wanted to point out the same quality aspect flowing down even in defense. If you look at the capex part of defense budget, that is budgeted to grow at 9.5%, right? And there is also a qualitative shift towards things like next-gen weapon systems and deep tech. I think we should not miss out on the qualitative change that is happening at a time when globally there are enough examples of fiscally irresponsible behavior, and also in a very, very turbulent sort of a world. And therefore, putting it all together, I think the consistency and the commitment to capex-led growth is the most desirable outcome. And let's not just see this or dismiss this as an interim budget. Let's look at this as a trend. And I'm really glad that finally the government is actually delivering or walking the talk on this. Back to you.
Thanks, Sachchidanand. So again, the key theme with all the four economists you spoke about is the responsibility. So very responsible budget, firmly on the path of fiscal consolidation, and she is walking the talk. Welcome, Sunil. We heard them. Now you give us the market perspective, and Madan Madan spoke about that. There is a little bit of disconnect in the market borrowing numbers, which and he is wondering why the market is cheering. What is Madan was hinted at this? We had net borrowing is 11.75 trillion. Rupees, and the gross borrowing is 14.13 trillion. Now, if you look at the redemptions number, which will be coming here, this net and gross don't work together. One of them is correct. Now, if we presume that, and let's presume and net is correct, 11.75, then if you look at netting off of the redemptions, it should have been 15 plus. So why this new, that smaller number 14.13 has come? Because the finance minister or the budget has proposed that 1.23 trillion will come from this GST compensation cess pool. So that's how the gross borrowing program has been compressed by this amount. Others would have been as much as last year's 15 trillion plus. And Madan, who is the chief economist of Bank of Baroda, is just wondering why market is cheering, why this bond 10-year yield has come down from 7.10 or something to 7.2. I mean, what's the reason, etc. So that's one part of it. Tell us about the transparency of the budget, responsible budget, and walking the talk, being on the fiscal consolidation path. These are the, and Anubhuti spoke about, is also government is looking also at the Moody's and S&P is about the rating upgrade by being this kind of acceptable, presentable, transparent budget. So how is the market? Equity market yesterday was tepid. Actually, it fell marginally. Today it's up. Bond market is giving a lot of cheer. So from the market's point of view, how do you see? Your microphone is. You have to put on the microphone. Yeah.
First of all, my apology for being late. Sorry, and there is a reason, and I'm going to put that in the context why I was late. I'm so glad that you clarified these numbers, because this was one thing which was going around since yesterday, and glad that you provided that, and the market knows these numbers, and therefore the construct which you have seen in the market and the both bond market and therefore the prices of the banking stock today. I want to just share with you, I'm a practitioner, so I'll give you the practical reality of the budget which we are seeing on the ground. Since yesterday, and that was one of the reasons why I was late, I had two very significant meetings with the large global manufacturers. They are actually manufacturing, the contract manufacturing in India and setting up their own manufacturing. And they work for the best in the world, literally the best in the world when I'm saying. And they were talking to me to expand and add more capacity. So the point which was coming around in terms of the capex of 11.11 lakh crore, plus the states will actually support through their own capex, which was around 3 odd lakhs crore last time, plus the private sector capex which will happen, which has not happened in the real significant way. This time we see that happening. The reason I was giving you anecdotal those two meetings in the examples is because people have already started thinking and reacting because of the point which you made, Tamal, is the consistency, a responsible budget, and as you just heard the comment that in the election year, somebody giving this kind of indication in the market, I clearly say this is a GPS for the Indian economy, which is indicating towards the right thing, which we should have had many years ago. So this will definitely have, and one of the reasons why market is reacting positively, because market is expecting that now finally the turnaround will happen. Just two numbers, and this was put down in the context earlier also. If we look at our capex, and we have always said that we are a capital starved country, right? So the capital expenditure at the beginning of the tenure of this government 10 years ago was 2 lakhs. This year, if you take 11 plus state plus private sector, it could be almost 20 lakhs. So it has gone up by 10 times. Just 2 years ago, it was 5 lakhs, and now it is almost 14, 15 lakhs. Right? So these are big numbers, and it will have an impact on the market. And that is the reason why you're seeing the way the market, all the three markets, the bond market, currency market, and the equity market, we have the leading economists, they know, they understand the market. But it sounds very positive from the market point of view.
Sunil, before I go to the others and all, just one additional thing that you're talking about, private capex. Where is private capex? Why the private sector is still just brooding on, and before, why are they taking time to take the leap of faith?
So that is where, Tamal, I picked up one of the ratios which you have been using quite a lot in your writing and all, is the capacity utilization, right? Now, in most sectors, the most infrastructure sectors, the steel and the cement and the bigger sectors, plus manufacturing, if you see most sectors, the capacity utilization at its peak, at its fullest. And generally, the new capacity takes 2 to 3 years to come. You would see a lot of announcements. It's already started happening on the commodity. It has already started happening, but you will see more of such announcements happening now going forward.
Okay, so it's 4:12 now. We have 18 minutes left. So quickly, all of you, I mean, we'll start with Rajni and the same order we'll go. Maybe 2 minutes each and all, then we can have one more round. Is this, Rajni? I mean, this budget, all of us have agreed that this is responsible, this is fiscally responsible, this is the way to go. You are all convinced, whether you're an economist or you're a market person. You know? I mean, we can keep on going on the micro issues and all. But tell us, I mean, each of you on the same subject, that now on the one hand, we are talking about inclusive growth, and I don't want to repeat all the schemes, etc., which the government have been doing. But on the other hand, we at the same time, in the same breath, we talk about the K-shaped recovery. Actually, if you look at post-COVID Indian economic growth, I mean, the wealthier become the wealthier, and actually the so-called below poverty line people and all, they're not going anywhere. And we are probably taking not the right way, because jobs are not being created. We had the schemes like Make in India and everything, but yes, on infrastructure there are a lot of things happening. But when it comes to this inclusive growth, it's not translating into all the efforts, not translating into job creation. It's more, the doling and the subsidies and all. So how do you get? Is this the right approach? I mean, is this the right analysis of this, or things are actually happening? And if you think it's the right analysis, then what should be the actually focus of the next budget? Rajni, we'll start with you.
Yeah. So, Tamal, I would say if you look at this government, the way they have been looking at these issues is that right post the pandemic, we have seen that the government has not given money directly in the hands of people. So we have seen that in the last few years, we have not had measures which would directly boost consumption. They have chosen the path which is a little long drawn, but will lead to hopefully more sustainable growth. And that path is more towards capex, that path is more towards equipping and skilling and creating the right environment for our sectors to flourish and grow. So it's so I would agree that yes, there have not been direct measures, and this K-shaped recovery that we are talking about. Maybe if there were direct consumption boosting measures, direct benefits given to the poorer people, it would have helped. But I guess I would say the path that they have chosen is a more difficult path, but it will help us in the longer run, which is about creating the right business environment. Because even if we look at the, some of these social sectors, even if we look at the agri sector, I would say that, small steps are being introduced. Steps to improve agri infrastructure, steps to improve agri allied sectors, not just agriculture sector. Because if you're talking about improving the rural sector income, we have to look at the whole ecosystem, not just the agriculture sector, but also the other sectors like fishery or milk production or livestock, things like that. And there is focus on that, including on agri marketing. So instead of giving completely directly doling out benefits, I would say they are taking this indirect measure, which will in fact be more beneficial in the long term.
What do you, Madam?
See, Tamal, I think the government has done everything it can to create an enabling environment to make sure that business can prosper. the onus of creating jobs actually is in the private sector. Because if you look at the central government or even the state governments, there's a limit to which they can be hiring people, and they're doing things in the regular course of that. So if you look at the railways, for example, we have those ads coming up and this high level of recruitment taking place. But I think jobs need to be created in the private sector, because only when you create jobs are you able to create income. If you create income, you are able to create consumption. You create consumption, then you're able to improve capacity utilization, which leads to higher investment. So today we have a situation where everybody is averse to taking in more labor unless you see demand. So if you see the commentaries of most of the companies which keep bringing out the results, we keep following all of them. Most of them are saying they're expecting rural demand to recover in the next quarter. It's a kind of a rolling kind of thing. I heard it in Q1, I've heard it in Q2, now again in Q3, because we're not really sure. So therefore, I think the hiring part has taken a beating. Hiring has taken place at a low-end job. So I think construction, whatever the government is doing, yes, it leads to lots of jobs, but those are not the jobs which can make people get from a cycle to a two-wheeler or go onto a four-wheeler. Similarly, we have all these logistics guys, these Zomato, etc. There are lakhs and millions of people who have been employed. But you look at the kind of quality of life. 6 o'clock morning till 12 in the night, they're delivering, they get 30 rupees per order, 20 rupees per order, provided they're able to do 1,000 rupees, 40 orders or 45 orders a day. So to create the right kind of thing, I think it's the onus on the private sector. Private sector, look at the IT companies. They're also laying off people. So they're on to laying off people. Everybody wants to go in for AI. But just think of this thing, you get more and more AI. You can hold a webinar tomorrow by having more intelligent AI giving the views rather than having all of us sitting here. So I think we are self-destructive. We are trying to embrace something which is going to replace human beings. And it's easy to say that we need to reskill ourselves. Can the man on the road actually, can the Swiggy boy be made to reskill himself and know all these things? He's going to continue transporting things, endangering his own life. So I think the onus is really on the private sector. Let us not keep throwing everything on the government. The government cannot be doing everything. They create the right kind of policy framework in which you can operate. There, I think there's no complaint. I don't think any industry has any complaint. But at the end of the day, it is people who are running their own enterprise. Look at the startup business. The entire thing seems to be a sham. Lots of them have closed up. Lots of these bubbles are bursting. Earlier, we thought all the startups are going to create a lot of value. Then we saw what happened in the IPO market. Lots of them came. The people complained saying that they had overvaluation and they were taken for a ride. So we had all kinds of controversies. I mean, we all know what's been happening out there. And we felt earlier at one point of time, startups will be creating jobs. Now those enterprises are closing down. Yeah? Forget about creating jobs. So I think that is a deep-rooted problem, something which I have to address. And since the private sector is not doing it in a hurry, I think what the government is doing is right. You have to let the poor people survive. So you give these freebies, you give them cash, you give them the Nariga jobs. They're not really very constructive jobs which you're giving them. You give them insurance, you give them housing, you give them water. So if you look at the Niti Aayog indicators, that when they're talking of poverty ratio coming down, it's essentially because of the government has been helping out the people. It's not coming from the private sector, because the private sector has to look at ROI all the time.
It's good to hear. Yeah, Madan, so Bank of Baroda is not going to be privatized, I'm sure, as long as you are the economist there. So good. So you're talking about the startups. I mean, they care more for valuation than creating value. That's what you're saying. They're very blunt. Anubhuti, just tell us, take us through this. Madan is saying that no, I mean, you don't expect this from budget for this inclusive growth. Actually, it's all this job creation, etc. It's the private sector's responsibility. Now we are the fastest growing major economy, the economy globally, and we are talking about when to reach the third place in terms of the size. I mean, whether it's 2007, 2008, 2009. So, but the growth is so uneven, and there's two India now within this one India. So tell us, Anubhuti, what needs to be done that next budget can do all the thing? Yeah.
Yeah, sure. I completely agree. Is there? Yeah, can you hear me?
Yes. Please, Korean.
Yeah. So, I mean, the starting point of your question, what the budget needs to do in order to make growth far more, inclusive, is obviously we'll have to, there is a lot of spend on capex, and Once private sector steps in, then probably we can see a faster pace of job creation. Key question is, can jobs be created at the right speed? Because there are almost 10 to 12 million people who are joining the labor force, and it will be a long drawn process. We did talk about capex. That is working very well, but if you look at spend on education, health, skill building, that has remained stagnant over the last 10 years. So I don't know if that will happen immediately, because the government has a lot of competing claims. They have probably a different priority, which is, which might not work too well. But at this point in time, I'm not sure if in the next budget itself we'll see increased allocation towards improved social infrastructure. Having said that, on the part about inclusive development and the K-shaped recovery, which we have been talking about, here I would like to just take a step back. We all have talked about that probably the government should have done a lot more to boost, or at least it is debated that should the government have done more to boost, say, rural demand. For me, the starting point is what actually led to a much muted demand from rural India. Why government needs to step in? Of course, there is that rural demand has not been very strong over the past few years. But what actually led it to slow down so significantly in the last 12 months? And the answer is very clear. It has to do a lot with what's happening on the weather front. El Nino year, if you look at 2014, 2015, these were the years of bad rain when agricultural output contracted. Almost 40% of earning for a typical agri household is from the sale of agriculture produce. And if your kharif production is contracting by 6-7%, then you are not really earning. This again has a double whammy via higher inflation and therefore reduced real wages with every single rural household. So if this hypothesis of ours is correct, that the kind of slowdown which we have seen can get reversed if monsoons are better. I'm not saying it will be perfect, but if we do not get a dry period the way we did it in 2023, a lot of recovery in rural demand and this whole K-shaped recovery debate can start. It might just start coming off, and probably then a strong support, at least from a next 12 to 18 months period might not be required. We also need to remember that if rural demand comes back, it increases overall aggregate demand, and therefore further incentivizes private sector investment to pick up. So should the budget do a lot more on
Yeah, Anvati, I think there is some problem there, but anyway, she was almost coming to an end. Sachchidanand, tell us a little bit. Not much of time left, 2-3 minutes. Can you hear us, Sajid? Yeah, because as far as infrastructure is concerned, I think we are doing a phenomenal job when the country. In the payment space within the financial sector, again, we are the sort of vanguard in the entire world. But Anuvati, we just shifted because you are almost coming to an end. Is that okay, Anuvati? Yeah. Sachchidanand, tell us. How do we make the growth story really inclusive and let not people talk about K-shaped recovery anymore as far as India is concerned? How do we do this? Can the next budget? Anuvati spoke about monsoon playing a role. Madan spoke about don't ask the government to do everything. It's the the private sector needs to come in. What do you say? How do you look at this?
So absolutely, I think the only way to create jobs sustainably is to get the private sector really come back to life in the way that it has been. So globally, we have enough empirical evidence that governments cannot create jobs on a sustainable basis. So yes, they can do a stopgap thing. You can use Keynesian economics in times of trouble and in times like these when there is a lot of volatility or animal spirits are missing. The government can do its bit. And I think we are in that phase of the journey where the government needs to continue doing its bit. And I think Sunil Bhai spoke about one C, which is capacity. I think there are two other C's that I wanted to highlight, which will enable this or further this journey and entice the private sector. The second and more important C, I think, is confidence. If you look at what's happening around the world, everything that could have gone wrong has gone wrong in the last, say, couple of years, right? From COVID to hot wars continuing in Europe, and climate change, AI, so technology, geopolitics, macroeconomic shifts. I mean, all of these are becoming extremely challenging. And that has sapped the confidence, and that's what was referred to as animal spirits. I think that will take some time. Until that time, the government needs to continue to do what it's doing. The other C, Tamalda, is the cost of capital. I mean, I started off by saying that the era of no color of money has vanished now. Money comes at a cost, right? You will really have to struggle. You'll have to really make a case for any incremental investment. And we know investments are critical to creating jobs sustainably. And therefore, I think cost of capital, we don't quite realize it in India. But globally, I mean, talk to anybody. 0 to 5.5 in those kind of economies, advanced economies, which have traditionally struggled to grow at even 2%, is humongous. And I gave some statistics earlier, part of my intervention. So I think once these three C's fall into place, the private sector will come in. In terms of capex, I think 30 to 33% of the incremental stuff is now beginning to come from the private sector. At the peak, we were close to 40, so 38 to 40%. But till then, the government needs to continue to do what it is doing. And what do I mean by that? The investments, the capex-led or the heavy infrastructure investments have to be continued. It is a more democratized way of creating jobs, right? So when you're building a bridge or an airport or a port or railway line, you're distributing jobs and growth. You're not just putting money into certain pockets in certain states. So I think it is a much better way of doing things. And at the same time, the government is also providing the safety net by giving food for free, giving money, transferring money in a much more targeted way, whether it is Kisan, whether it is Narega, whether it is gas cylinders and things like that. So I think both of these are needed, and it needs to continue till the three C's.
Thanks, Sachchidanand. Yeah, I want to like infrastructure, housing for all also is a thing which can generate lots of employment, because insurance, cement and iron, steel and labor, everything comes there. So Sunil bhai, he spoke about three C's, and one of the C's the cost of capital. So in the last round, just one sentence or two sentences each, because we have about 2 minutes left. How would Mr. Das, our Sachchidanand Das, RBI governor, will look at the budget? Because 8th is the next policy. The MPC meeting ends on 8th. That's the last of the, after budget it always happens, and the last of the year. So starting with Sunil, I'll ask Sunil, just one or two sentences each. In the context of the budget has fulfilled what we wanted to have, the consolidation path, fiscal consolidation and responsibility. How would RBI respond to it?
Okay,
Sunil,
I will split.
Just two sentences each.
I will take two sentences, but I'll address the two issues very quickly. One is we talked about the rural demand. The second is the RBI's perspective on this. On the rural demand,
Sunil, very quickly, because we are 4:29. Just 2-3 minutes we are exceeding.
Anecdotal.
And I want each of you to have one sentence.
Anecdotal view I have is that you look at any sector, there is a chock-a-block, whether aviation or hotel or a restaurant, any consumption, everything. So there is the pattern of the rural demand is changing. I don't think the rural demand is contrasting. It's the change of the pattern because the per capita income is increasing. Quickly, in terms of RBI, I think there has been enough indication from RBI that they will be data-driven. And data at this point of time, Governor has recently also commented on that we don't see rate increase. As far as the cut is concerned, my view is that we have some time to wait, unless until really see the inflation coming under control.
Sachchidanand,
I think this budget will give more shakti to Mr. Das, right, and more confidence in terms of doing the right thing. Once I think we get the Fed signal, and which will be sooner than later, and also some clarity on the monsoon trajectory with IMF, IMD, and the SkyMet, etc., coming out with the monsoon forecast. And we'll soon have the budget once the new government takes over, right? July. I think things would have fallen in place for the RBI to do the right thing.
Now, what is the right thing?
Cut rates from here. I mean, July onwards, I do expect the RBI to soften. And as I said, the cost of capital is a...
Sure. Anubhuti, are you there, Anubhuti? If she is not there...
yeah, hi, sorry, my network is having problems. So I'll just keep the video
okay, just the voice will do, Anubhuti. Your expectation from RBI.
Yeah. Can you hear me?
Yes, please. One sentence.
Yeah,
they
have demonstrated that, I mean, policymakers have demonstrated that any response is measured. So while everything looks good as of now, we do not expect any hasty action on Feb 8th. Status quo both on rates as well as stance. Easier liquidity, rate cuts to begin from June of 24, and it will be a shallow rate cutting cycle of just 50 basis points.
Okay. Madan?
See, I think the budget will give a lot of, budget is for next year. So it gives a lot of comfort to the RBI that there will not be any untoward pressure from the government side through government borrowing. So they can carry on their credit policy based on their own motivations, that is targeting inflation.
Rajni, last word is yours.
So status quo in the upcoming policy meeting, but we are expecting a shallow rate cut, like Anubhuti said, around 50 basis points later during the year. And the main thing to watch out would be food inflation.
Okay. And just to later during the year, meaning that's the entire year is left. So whether it's starting in April,
June, so we are looking at second half of the year.
August sometime.
Yes.
Okay. Okay. So thank you, guys. I think we are late by 2 minutes. Apology to the administrator of this program. So essentially, what all of you, the 4 economists and one market person, all of you are happy the way the budget, the interim budget has been presented. Essentially, the like Mr. Das talked about the Arjuna, that one eye on the inflation which the governor has. Similarly, the finance minister has the eye only on fiscal consolidation, which she had committed 3 years back, and she is firmly walking the talk. She is on the right path. Now, on the micro issues, how much is spent on different sectors, etc. For the timing, it's just a pro forma budget. It's an intention kind of thing. I think we'll get to know what exactly is happening the post elections in the final budget. Meanwhile, market has taken it very, very positively, which is why bond market as well as equity is on an upswing because the government borrowing program is not exceeding the expectations, actually a little lower. And that's also gives a sort of a lot of confidence to Reserve Bank of India to fight inflation and be sticking to the inflation fighting mode, and probably a few months down the line starting cutting rate and infusing liquidity by changing the stance. So with this, thank you all, Madan and everybody else, all the economists.
Tamalda, just one second, Tamalda. I think we exceeded by 2 minutes, but you extracted almost a miracle by getting 3 out of 4 economists to agree on the rate cut starting from middle of the year.
Great. Brilliant.
But still, Sachchidanand and Tamal, I don't know, when every forum we have, why is it we always talk of rate cuts? We never talk of rate increases. It's as if axiomatic that we have to only reduce interest rates. As if it's a bad thing that interest rates rise when inflation goes up. We always, I think our discussions always start off with when will rates cut. The moment inflation number comes out, everybody says what will the RBI cut rate. No,
so I think Tamalda can have one more session sometime later. We'll debate on this.
Yep. Sir Sachchidanand already said, no, look at all the developed markets. What's the cost of capital? What's the cost of money people pay? So you are on the one hand, Madan, you are asking the private sector to take the onus, and on the other hand, you are not looking at the cost. So that's what Sachchidanand comes in, no? But that only
cost has never been the limiting factor for investment. We've had high interest rate regimes. You invest when you see business, yeah. Just like you buy a house, you don't stop buying houses because the rates have gone up, yeah. The home loans
other C.
The cost of fund it's a very marginal. I mean, very small when it comes to the overall cost for any project. So that's a separate story, and we can have it after RBI policy and all if Deepak wants it. But for the timing, from my side, goodbye. Over to you, Deepak.
Yeah. Thank you very much. I think this was very engaging and engrossing sort of discussion, and we can keep on talking about the economic policies which affect obviously whether it is ease of doing business. I think I remember you just mentioned last point, cost of doing business. I remember someone very leading industrialist talking to one of the very prominent political leader, saying that we will manage cost of doing business. Please provide us good ease of doing business. So until unless you provide that enabling ecosystem, doesn't matter how things are on the other sides. So while it does matter, a small portion, but I think it is an important part. So, but anyways, thank you very much. I think this was very very enriching discussion, and a lot of things we will take back. I think my colleague was also online, and we were looking to see address some of the issues with the government, and we'll certainly take all these inputs to them. And Tamalda, you have always been a great a supporter as well as great moderator. So happy to arrange these kind of sessions more often. No problem at all. We do have a large FICCI chief economist group, almost 30 economists, part of that, and I think we need to utilize them and have their views more often for the benefit of industry as well as for the benefit of government. So with that, and I would also again like to thank all our participants as well as our partners for doing this program. Always little less interest in doing programs which are a post-interim budget. But I guess, this was still a very good discussion and very good points coming out of it. So we would like to see all of you again, if not very soon, at least during the full budget and do a maybe physical program again like last year to have a greater interaction and see that people get benefited out of it. So thank you very much, Mr. Sabnaves, Rajni, Dr. Shukla, Anubhuti ji, and Mr. Sangai, for joining us. And thank you to the GT team also for staying back and providing their views, both Karan and Amit. And we hope to do more similar programs for benefit of our audience. Thank you very much.
Deepak, thank you for setting this up, Deepak.
Thank you.
Thank you, Deepak.
Bye.